One of the biggest questions we receive from homebuyers is, what exactly are closing costs? And that's a fair question. At first glance, it can look like a lot of numbers moving in a lot of different directions. The truth is, closing costs are not a single fee. They're a collection of expenses associated with purchasing and financing a home. Some costs are related to the mortgage itself. Others are paid to third parties involved in helping complete the transaction. For example, appraisal fees, title work, homeowner's insurance, taxes, recording fees, and establishing your escrow account. One of the biggest misconceptions about closing costs is that all of the money is going to the lender. In reality, many of those funds are distributed to the parties helping complete the transaction. Now, here's another important thing to understand. The closing costs you see early in the process are estimates. As we move through processing and underwriting, some figures may increase, some may decrease, and some may remain the same. That doesn't necessarily mean something is wrong. It simply means we're continuing to refine the numbers as we move closer to closing day. It's also important to understand that closing costs and cash to close are not always the same thing. Closing costs are the expenses associated with the transaction. Cash to close is the total amount needed at closing after accounting for deposits, credits, down payment requirements, and other adjustments. The goal of this process is not to surprise you. The goal is transparency. To help you understand what you're paying for, why you're paying it, and where those funds are going. And as always, if you have questions, don't panic. We're here to help. We've got your six, and together, we'll follow the money.